When you're thinking about adding to these positions, obviously you're looking at valuation. Do you at all factor in the technical side of things and not getting too crazy with it, but hey, this stock 200 ASMA, right? It's been cracked. It's now 5% below it. We retested it once and it failed. Maybe not a great ad. I'm just curious if you think about that.
Yeah, we do. I mean, you might end up saying, I really like this name and it's down a lot, but then you want to look at the technicals and say, like, is it still going to, are the technicals showing me that it's going to continue on this downtrend and we actually haven't seen the bottom? Equally, if there's a name that kind of comes up in some of our screens that shows that it's up a lot, but now it's like hitting this resistance level, or it started to fall, and maybe it's sitting on the 50-day. I noticed actually earlier in the week, it was actually while I was on CNBC, I was like, I was there at the New York Stock Exchange and I'm watching the S&P and I see it was sitting on the 50-day and then it just broke through. So that to me that was like a bearish sign for me, which is why I was so confused about this morning. And now it's changed. So yes, we definitely look at technicals. And I think technicals can help you decide entry points and exit points, but not necessarily tell you what to buy or what to invest in.
Yeah, it was a good point on SPY. It was a bit of a rough give up of the 50-day after reclaiming it very briefly and then just basically flushing from there. Now we're the furthest we've been below the 50-day in quite a while on the market, and then everyone starts looking at the 200. So that makes sense.
I know, and I was looking at like what's the next resistance level?
So for me, I've got a couple of them. I'm curious to hear what yours are. There's not a ton of volume transparently until about the 600, 606 level. I think that there's pretty low volume through that area, and that's just because we didn't spend a lot of time chopping there. We essentially moved back up. You have your 200 EMA at 626 that I watch. You have your 200 SMA at 615. So for me, those are really the three next areas, but it is a bit of a gap for me between 626 to 655. I don't have a ton of resistance to go off of there or support.
Yeah, I was kind of like drawing a line across, like actually 6,500 kind of seemed to be like a resistance level. You can see it like in, what time is that? Like
Okay,
October
yeah.
10th, you can see it like touching that and kind of going back up. So that's the
And the
level I was
17th.
watching.
Yeah.
And then below that, to your point, it's lower.
Yeah. I mean, that's basically the end of the volume shelf right now. And I really like looking at these. And I don't know if you look at them in a similar way, but I like to see kind of that histogram on the side. And you have a lot of volume right now between about 656 to 665. There's about $500 million worth of volume right there, specifically on SPY. Obviously, there's other stuff.
Yeah.
What's really interesting to me is speaking of volume, today is, I believe, our largest volume day on SPY since April 10th, which was essentially where we really started to come back out of that bottom. How much do you pay attention to volume?
I do when I'm looking at technicals, because I think one thing, we had Hood Summit. You were there in September, and one of the guys that we've had the last 2 years, he's a technical analyst, and he says like he looks for just a couple things. One is like, moving average. He looks at like two things, moving averages, and then he says he created something called the Brobdingnagian base. This is called John Roque is the guy I'm talking about. He said if you're a base and breakout, if you see a base and breakout and it's on volume, that's like where that's when he looks at volume.
Got it. Yeah, that makes sense. So to kind of go back a little bit, just talking about targets here. So you had an original 2025 S&P target of 6,500, and that got hit in December, so congrats. And now I'm sure people want to know what the next target is here, the updates, right? The 2026 targets. And so let's talk a little bit about that.
Yeah. So as you said, my target was 6,500. I didn't really officially change it, even though we breached it in September, like started breaching it in September, because I kept feeling like there was going to be some like mini shakeout that like could prevent us from ending the year much higher than that. But I was like, look, if I'm wrong and like I'm looking at technicals and stuff, like I could, see us, and thinking about valuation, I could see us getting to 6,900. So that's like where I was like, okay, if I'm wrong about a shakeout, then that's where we could be. I started looking ahead to next year, and I haven't officially like put anything out. I will write an outlook for 2026 later in the year, but I started doing some work on valuation and earnings growth. Look, broad consensus as of a couple days ago was that earnings expectations for S&P 500 in aggregate was 14% for next year, and an earnings growth of 14% for the year after that. That historically speaking is high to have 2 years in a row of double digits after 2 years in a row of double digits. It doesn't mean it's not possible. It just means that it's unlikely. And so I was worried. I was just worried about like, okay, so even if I can say, yes, that's what earnings growth are going to be, how do I even get like, and then what multiple am I applying to that? Like what valuation metrics? So to give everybody listening a sense, like valuations have been trading around 20 to 23 times, depending on the point in the market that you're looking at. That is also really high compared to history, but you know, let's say we can apply a 21 times. You know, I was like, okay, how do I get there? I could say that you get this multiple expansion because right now, or at least as of a couple days ago, the 14% earnings growth in 2027 was getting us to a 19 times multiple. So if you say, okay, how do I get to multiple expansion? Maybe that happens because interest rates come down. If I get to 21 times, it was getting me to around this is a long explanation, sorry. It was getting me to 7,300 on the S&P at most.
Okay.
That's not something to scoff at, but it wasn't double digit returns either at the time that I did this analysis. So I have to kind of see how this goes over the next, week or so. But it was another story in data that was showing me that like a lot of good stuff is already expected. And when that happens, you just got to walk cautiously.